Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, April 18th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. Here's a look at the daily time frame of the ES. The ES fought off early selling pressure in the previous session here to bounce late in the day. The last couple of hours bounced late in the day to finish near the highs of the day, and again, an upward sloping pattern here as this thing continues to go stretch for the previous quarter's high. We still have a narrow 2-week development that's played out here, so perhaps an attempt to break through might still be there. But again, we are coming up to a major edge up here. 4,200 is the edge. You have the key range edge, market structure edge, all of this resistance coming into play coming up soon. So again, once price does push through the previous quarter's highs, how is the market going to respond? Are we going to see this thing back down, similar to what it did back here, and then perhaps return back toward 4,100? Or do we see a transition through that zone that opens up much more up ahead? So again, keeping an eye on the edge of the range here, the previous quarter's high right in that 4,200 area. That's going to be the key level to watch here today. Early on today, nice unidirectional trending market in overnight and pre-market trading here. Bulls want to keep the previous week's high bid at 41.89. Taking a look here at the NQ. The NQ, multiple week narrow range. I think we're now on 14 days narrow here. This thing's right at the top end of the range as well. Early overnight strength here, pre-market strength as this thing holds just above the previous week's high. That's the level to watch. That's going to be the early level to watch. A failure to hold the previous week's high could open up a rotation back within the trading range. If it can hold above that level, perhaps it tries for a bit more upside expansion here, and we test prices beyond the previous quarter's high. So right now, this thing still has more upside that could be seen. If it wanted to get as high as that 13,750, that's the next big level up above. You can see right here using recent highs back here into these highs and this one. We have a little bit more. If the next squeeze takes us a bit higher, 13,750 could be the next upside target ahead. The NQ and tech have been leading to the upside so far. If we take a look at crude oil, this one's down a little bit here so far today. The previous session saw a failure through the 81.50 level. That was the level to watch early yesterday during the pre-market trade. Price broke down through that level, stop run day down, and is now holding below the 81 level. And again, breaking back below 81.50 is indicative of a continuation that could take you back to 79 very quickly. From 79, any bounce could be a lower high that leads you to a gap fill up ahead. So this is going to be very interesting to see how price responds. Right now you have the rising bullish Pima trigger zone. Price pushes back below the 8-period average and is holding right there. Is this an opportunity for another high to come along, or again, does failing at that 81.50 edge or 82 here suggest that the next pullback to 82 could be sold? I think right now the next lower high could be an opportunity to sell it for a return back to a gap fill ahead with 79 as a near-term target. Taking a look at gold futures, this one's up about 1/3 of 1% right now, but is again still showing initial signs of rejection at the highs here. Higher high failure. The weekly chart shows a rejection as well for the previous week, where you had the early push higher followed by the Friday dump. That gave you a nice wick reversal sell signal up there. But is price going to drop back below 2,000? If so, then 1960 is going to be the big level to watch. Once price fails to hold 1960, any pullback could be sold for a continuation back down toward 1830, maybe as low as 1800s right now. So is the high in? You know, this doesn't look as strong as the other times we were up here and saw rejection, but it's not bad either. It's a decent rejection right now, higher high failure. You have an inside narrow range day right now, 40% of ADR. And again, any bounce could be sold. Prices above the previous high could be sold for a continuation down if 2,000 is taken out, that could open up the odds here of a return quite a bit lower. All right, let's take a look here lastly at the YM. The YM here with a range today of about 176 points, been averaging 300 per day over the last 10 sessions. This thing found the previous week's high and then turned around sharply. So a strong intraday rejection already developing there. A 2-hour rally and reversal combination there, and pulling back a little bit at the moment. Now, this market has been about as strong as it gets here lately, especially after the recent rejection and the follow-through above 33K, but we haven't quite reached that edge yet that we were looking for. 34,500 is the edge. You got about 34,550 as the previous quarter's high. Those are still targets likely left to go get. So if we are going to see a bit of a pullback, that pullback could be a buying opportunity for a continuation to the upside up ahead. As of right now, seeing initial reaction at the previous week's high price, which means a test at the previous week's close could be ahead. That's 33,100 with a shot to see a rotation back across toward the 8-period average. So again, right now still trending up, but on a counter trend move, it could be defended for a continuation toward that quarterly high. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.